Hello, do you know your number? Now, what do I mean by that? Well, let me explain. It's been estimated, a lot of research has been done on this. It's been estimated that for every pound of income you want, you'd want a fund that's big enough or a pool of money that's big enough that you could take 4% out, because 4% is basically the amount that's been shown historically to be that you could take it out and still not deplete your fund. Because obviously, if you deplete your fund, you run into trouble later because you won't have any money left. So you need a pot that's big enough to be able to take 4%. So what does that mean? Well, say you wanted an income of 10,000 a year. Now, bear in mind, this income that you get may well be before tax. In some instances, you could have it, free of tax, but it depends how you do it. But you want this income, and it could be sort of taxed or partly taxed. Well, you would need a fund to be able to do that based on this 4%. You'd need a fund of 250,000. So how would you get to that fund? Well, you've got various options. You could, if you run a business, you could rely on your business, and then you've got various options. So it might be that you'll get someone to take over the running of your business, and you'll be able to take an income going forward at some stage in the future. That could work. It may be that you're relying on your business being your pension, in which case you'll be looking to sell your business. Now, if you come to sell your business, well, first of all, there is a tax break. You would probably get business assets disposal relief. So you'd probably only have to pay capital gains tax at 10%. There's various criteria you have to fit in with there, but basically that's how it works. Which is fine. But when you come to sell your business, you've got a couple of questions then, haven't you? First of all, how easy will it be to sell your business? And secondly, what's the market going to be like? So in terms of the market, well, it could be a bad time for the economy. It mightn't be easy at all. And even if it is, well, if you're going to sell your business, is it systemized? So have you got a business that runs itself when you're not there? Because the more systemized it is, the easier it'll be to sell. And have you built your business up to be sufficiently large to be worth? Bear in mind, you need that much for every 10,000 of income you want to take going forward. So if you wanted 40,000 income, you'd have to be able to sell your business for 1 million. Now, there are actually 8 key strategies that work for any business and business owner, which will enable you to rapidly grow your business. So if you're interested in finding out about those, just message me and I can let you have some more information. So that's one option. Now, one big thing that people forget about when they talk about my business being my pension is that if you get into any sort of difficulty, your creditors can access your assets. They can get their money back from your assets. So you could be going like for many, many years, and you could be, say, 3, 4, 5 years away from when you want to be able to sell this business. You get into trading difficulties, and you'll find that the creditors basically take what they're owed, and you're left with very little. So it's a risky business. So that's why there's a strong argument for getting your money, or at least quite a bit of your money, out of the business and into your own pot. And then again, you've got various options. The most common one is probably a pension. Now, I've ticked here with a pension, depending on how you do it, because there are different ways of doing this, but you'll get tax relief on the way in, either personally or from the business, depending on who pays the money. So you get tax relief on the way in, and you'll also get some of it called a tax-free lump sum. You'll get some of it as tax-free on the way out. Typically, it's 25%, but there are different rules, so it isn't always 25%. There's different amounts. But effectively, let's say, for sake of argument, you'll get 25% of it coming out as tax-free, and you get tax relief on the way in. So that's obviously a very attractive way of building up a pot of money. You can also do ISAs. With ISAs, you don't get any tax on the way in, but you get tax relief on the way out. Now, with both pensions and ISAs, you also get growth that's free of income tax and corporation tax generally, and capital gains tax. So you get tax-free growth as well. And there are other options you can do: venture capital trusts, enterprise investment schemes, seed investment schemes. So there are other methods. These tend to be seen as riskier. Okay, so there's lots of options. Now, then you need to work out, well, if I wanted to get to that pot of money there that's big enough to provide me with an income of 10,000, so this is just for 10,000, how much would I need to pay in? Well, again, that then depends on what rate of return are you going to get, either in terms of building your business or in terms of your pot investment return, and how long have you got? So let's say that you were going to get a 5% real rate of return, i.e. above inflation, because we're talking in today's money here, but we need to translate it forward into, inflation proofing. So if we're talking about a 5% real rate of return, then in today's money, if you had 20 years to go, just to get to that pot of 250,000, you'd have to pay in 7,500 a year, i.e. 600-700 a month, which is obviously a lot of money. You may or may not, be able to pay that. Well, one, legally, and two, in terms of affordability. If you've got longer, let's just say that you've got 30 years to go, and you're going to get a higher rate of return than 5% in real terms, so 7% in real terms. Now, that's probably pushing it a bit, because the higher the rate of return you go for, the riskier it becomes, and it's not that easy to get those rates of return. But let's say you were lucky enough and fortunate enough that you got 7% a year, and you got it for the next 30 years, because you've got 30 years to go. Then instead of having to pay in 7,500, you'd have to pay in 2,700. So the moral of the story is that the younger you start, the easier it becomes. And also, the better the rate of return you get, the easier it becomes. So the upshot of all of that is that there are different methods to get here to this number. The number's 4%. So work out what the fund is. And there's a simple formula I can use to work out how much you would need to put away each year to get to that number if you were saving for it. If you were expecting your business to get to that amount, so you could sell it, dispose of it in some way and provide yourself with the income, then you need to know about these key strategies you can use to grow any business. And obviously, systemizing your business becomes very important in that regard. So you can see it's a huge area. It's basically business and personal financial planning for business owners and directors. And if you want to know more, feel free to message me. Feel free to like it and spread it, and I hope you found that useful. If you want some more ideas, go to bernardkeevy.com, and there's a few videos on there that might help you in terms of other ideas. Hope you found that worth watching. Thank you very much for being with me today.